From buy side, Wall Street Journal, mortgage rates are back above 7%. Will they drop again in 2024? Good article here on some of the consensus in terms of the outlook for mortgage rates and interest rates. Beginning the article, mortgage rates have soared in recent weeks as stubbornly high inflation is all but erased hope that the Fed will begin cutting interest rates this summer. As a result, buyers will likely face high mortgage rates throughout the all-important spring home buying season. The news is not all bad, though, especially if you don't need to buy ASAP. In fact, most experts still expect mortgage rates to drop later this year. Quote, the pandemic was too hot. 2023 was too cold, says Udeta Kushi, Deputy Chief Economist at First American Financial Corporation. Rates in 2024, quote, won't be just right, but it will be heading in a normalizing direction. Going on, mortgage rates climbed for most of 2023, at one point reaching nearly 8%, a level not seen in 2 decades, before dropping closer to 6.5%. We're well into 2024 now, and after falling a bit in early March, mortgage rates are now back above 7%. Still, most economists think mortgage rates will reverse course once again this year, if only by a modest amount. Should those predictions ring true, the question is, when will rates drop, and will it be enough to shift house and affordability in the right direction? The general consensus among industry professionals is that mortgage rates will slowly decline in the last quarter of 2024. The projected declines have shrunk, though, in recent months. At the start of the year, for instance, Fannie Mae predicted rates would drop to 5.8%. The mortgage purchaser has since adjusted its forecast to 6.4%. The Mortgage Bankers Association trade group also adjusted its rate prediction upward. Here's what experts are predicting mortgage rates will land by the close of the year and how those predictions have changed in recent months. Here we see changes from the start of the year prediction and the projected 30-year mortgage rate by end of year, all coming in at around 6.4 and 6.5% in terms of where consensus is. Going on, when 2023 ended, the average rate on a 30-year mortgage rate was 6.61%, according to Freddie Mac, and it's hovered in the mid 6% to low 7% range since. While that's about average historically and down a bit since rates peaked in 7.79% last October, such high rates were unthinkable a few years ago. In 2020 and 2021, the Federal Reserve was holding short-term interest rates near zero to spur the pandemic-battered economy, and mortgage lenders were offering rates below 3%. This pushed up demand for mortgages from home buyers as well as from homeowners looking to refinance existing loans. Once the Fed started raising rates to fight inflation in March 2022, though, mortgage lenders reversed course. This result was steadily rising home financing costs, slowing home sales, and leading to essentially non-existent refinance demand. As we enter 2024, inflation was trending downward, and the Fed had indicated rates cuts could be coming soon. Since then, though, inflation has ticked up for 2 months running, forcing the Fed to keep rates higher for longer. Wall Street investors expect that trend to continue for the next few Fed meetings, with rate cuts potentially coming in September or later. Policymakers at the Fed have also indicated they plan to leave rates elevated as long as necessary to get inflation under control. While the Fed doesn't set mortgage rates, lenders tend to follow the Fed's lead. Our modeling suggests a gradual, steady decline. This is predicated on getting consistently better inflation readings in the next couple of months. Lower rates would make new mortgage payments lower, but even then, buyers shouldn't expect any drastic improvements in affordability, especially with home insurance costs on the rise. A different form of, or one form of inflation there. On a $500,000 loan, for example, a 7% rate would mean a monthly mortgage rate of just over $3,300. At Realtor.com's projected year-end 6.5 rate, that payment would drop to $3,160, a difference of only $140. To make a big difference in affordability for most buyers, rates would have to fall more drastically than industry forecasts currently call for. The lowest current rate projection is 6.4%. Thanks a lot. Hope you enjoyed the article. If you did, give us a thumbs up. Subscribe if you haven't for more real estate news. And check out our website, selectfincap.com, and subscribe on our website to get a look at some exclusive investments. Thanks a lot.